All right, guys, let's just get right into it. First and foremost, the quiz. 1 through 10, there'll be 10 questions. And just label it 1 through 10. I'll go over the questions. You write down what you think the answer is. And then at the end, we'll do the quiz again and go over the answers. All right, so number 1, psychology is what % of your trading success? And technical analysis is what part or what % of your trading success? So there's a 2-part question there.
How much does each contribute? We talk about this quite frequently, so.
Hey guys, don't answer it. Don't answer it.
No,
guys.
don't
just
answer
write
it
down.
Yeah.
Just write it down. We'll go over the answers at the end. Yeah, write them down. Continue there.
I guess we don't have any way to track who's being honest.
Yeah.
Oh well.
That's all right, guys. Don't worry about it. All right, number 2. That was a pretty easy one. Now it's going to get a little more difficult. What are the 2 primary emotions that traders encounter while trading? The 2 primary emotions. Now, there are a lot of emotions that traders encounter while trading, but we specifically talk about 2 of them within the Psych series. A lot of these questions are derived from that Psych series that we have on our YouTube channel.
And it really is kind of a dichotomy of emotions, right? They're kind of transpose each other.
Yeah.
If that gives any type of hint.
Yeah. Just write down something, even if you don't know, just write down something. Maybe you'll get it correct. All right, number 3. Trading should be treated as a blank, not a hobby. These are really easy to start.
Yeah, they are. Sorry for the noise. I'm in DC this weekend. You can probably hear the train.
Yeah. Trading should be treated as a blank, not a hobby. All right, number 4. Our term, a dripping tap fills the bucket, is in reference to which component of trade management? Our term, a dripping tap fills the bucket, is in reference to which component of trade management? Yep, I'll repeat it again. Our term, quote, a dripping tap fills the bucket, unquote, is in reference to which component of trade management?
Certainly mentioned that term many times as well.
Yep.
I know most of you aren't new. I'm sure you've heard it before.
All right, number 5. Mindset and approach can be a huge hindrance to trading success. Most traders begin by prioritizing the blank instead of blank. Mindset and approach can be a huge hindrance to trading success. Most traders begin by prioritizing the blank instead of blank. So they prioritize one thing over the other, usually when they're first starting the trade.
Often based upon false expectations, unrealistic expectations, kind of marketed by companies that will not be named, but promoting a false lifestyle.
Yep. All right, number 6. One of the biggest contributors to psychological growth is actually establishing continuity of blank, something that resonates and makes logical sense to the trader, and so allows the trader to actually focus on his own psychology. I'll say it again. One of the biggest contributors to psychological growth is actually establishing continuity of blank. And here's the definition: something that resonates and makes logical sense to the trader, and so allows the trader to actually focus on his or her own psychology.
My English is not that good. They're asking to repeat. Sorry about that.
So I'll say it again.
We can
One
write
of
it
the
out.
biggest contributors to psychological growth is actually establishing continuity of blank. And the answer to this, I'm not going to tell you, but the answer is based upon something that resonates and makes logical sense to the trader, and so allows the trader to actually focus on his own psychology. So blank means like you have to fill in that
fill
blank.
in the blank.
Yeah, like,
that's what it means.
Yeah. And we'll go over the answers to all this, guys. Just wanted to, even if you don't know, just write something down, or we'll go over everything at the end. It's going to make a lot more sense. But this stuff is very, very important. You guys, don't answer it in the chat. Just write it down on your phone or on a piece of paper. We'll go over the answers at the end.
Yeah.
All right, we'll go to number 7. What is the term for searching for only the information or evidence that proves your existing beliefs? The term for searching only for the information or evidence that proves your own existing beliefs in the market, or what you think will happen. So you're searching for information that goes along with your existing beliefs.
It's a good one right there.
All right, number 8. What are the 2 primary byproducts of over leveraging besides the obvious, which is obviously blowing your account, right? That's just the main byproduct. These byproducts are 2 different additional things traders do. So as a result of over leveraging, what 2 other problems do traders usually face, or 2 other additional things that they do as a result of over leveraging that leads to these 2 things? So over leveraging leads a trader to do these 2 things mainly. The 2 primary ones I talked about. See, everything in psychology ties together. So over leveraging is just one of them, right? But it leads to other things as a result. When you over leverage, you are naturally attracted to that particular trade. You have
You're married to the bias.
Exactly. You're married to that bias, and it results in other issues as a result. And traders usually do 2 more things in addition to over leverage as a result of over leveraging in the first place. All right, the next one. And when I say blank, that means you have to fill in the blank. Blank makes you money, not blank. Both start with a P and him. That was pretty easy. Blank makes you money, not blank. And remember, guys, don't answer it in the chat. We'll go over the answers at the end. All right, last one. Name 2 ways to eliminate FOMO besides, having patience. Obviously, if you do these 2 things, I actually talk about 5 of them in the series video. If you do these things, these lead to having patience, obviously. But name 2 ways to eliminate FOMO. I mentioned 5 in the psych series videos. So you can, if you have all 5, if you know all 5, write it down, but name at least 2 ways in which to eliminate FOMO. All right, so that was the 10 questions. I'll go over all of those at the end. Now, really what we want to do now is just kind of open the floor up to what you guys think psychology truly means to you in trading. Want to make this very interactive. Want to talk about your experiences. We're going to go over our experiences, just kind of divulge deeper into these concepts that we have been talking about within the psych series, if you guys have been paying attention to that. And then towards the end, we'll take some questions. We'll wrap everything up by going over the quiz again, giving you the answers so you guys can compare your original answers to the answers after this webinar, and then we'll go over the giveaway towards the end, which is going to be pretty cool.
Yeah, that's the whole point of this, is to kind of have, like we do on our normal live sessions after we kind of get through our technical analysis, where we, unfortunately we never have really enough time to kind of get to everyone's questions. But it's typically how we open things up to you guys and let you ask questions and kind of pick our brain. This is what this whole session is for, right? So we're not trying to squeeze that in for 10, 15 minutes at the end of a live session like normal. We're just opening up right now. And so don't be shy, please, guys. Just I know a bunch of you aren't shy. So I look forward to hearing your thoughts, what you're struggling with at the moment.
Yep. So I guess my first question to you all is like, how would you define psychology? Let's just start from the basics. Let's just kind of work our way up to more of these in-depth concepts. So just starting from the fundamentals, like what is psychology in trading, and how does it affect us in everyday trading? Even in our personal lives, how does the psychology really drive our trading decisions? If you guys just unmute your mics, and let's just have a conversation.
Yeah, the chat's there too. Or we're gonna have to start calling on people.
Ooh. Maybe like a class.
It's all right if you don't speak good English either. It's fine.
Hey.
Hey, Simeon.
So I think psychology means how you accept things. How do you understand things?
How we understand things, yeah, that's part of it. And how we understand trading, how it affects our trading decisions.
How you manage your emotions also.
Exactly.
Psychology is really the most important thing that traders get wrong, is that they think that if they focus on the technical analysis side, they focus on the concepts and learning the material, that they're going to become successful traders. And that's a really good stepping stone. You have to understand the concepts in what you're trading, having that strategy, something that, really resonates with you going forward. So, psychology is, really about 80% of our trading decisions on a day-to-day basis. And about 20% is, our everyday trading, our strategy.
Exactly.
Right? So we have to be able to understand everything that we do on a day-to-day basis, whether that be during trading or outside of trading, and how that could impact our trading decisions. Something as simple as, this is what we talked about on our last live session. And this is, how I can kind of prove that, some of the things that everyone does, you guys don't even know that it's psychologically based, but it really derives strictly from your emotions. So I talk about how we can best take partials, right, within our trading, or, move stops to break even, or confirm a trade before looking to add additional positions. So the specific, situation that I gave, was based upon confirmation. So if we were looking to enter into a trade, okay, and you didn't really have enough confidence in that trade, and you wanted to wait for price to react off of a specific level, okay? So you wanted to wait for confirmation. You wanted to wait for initial reactions, wanted to see more confirmation before looking to get into the market. So what happens is that maybe price comes down into that level and you see the reaction from the level, and you wait for confirmation. You're waiting for some sort of counter trend break of structure or some sort of pullback to get back into the market. But then the market doesn't pull back, and it continues, and it really just goes in one direction. So it hits your level and then immediately reverses and goes in the correct direction. So in the trader's mind, you would be thinking, okay, I got the direction right the whole time. It came into my level the entire time. I don't want to be wrong and not get into the market. I was right to begin with. I don't want to miss out on this trade, because as a trader, our predetermined bias, or what we want to happen, that's going to affect our trading decisions. So if we think something's going to happen and it happens, us as traders expect to be making money from that. So when you try to confirm something, it hits your level of interest and goes in the right direction, but you're not in the market and you're waiting for price to pull back and it doesn't, you're more apt to get into the market at a worse price, right? You just
Chase the
decide
trade.
You just decide to place your position because you don't want to miss out on it. Now, many people will say, oh, I just lost the trade, right? I got in late, and then price reversed on me, right? Went the other way. Well, it's not the fact that you didn't understand the concepts. It had nothing to do with you getting the trade wrong or not understanding the concepts that was taught or your strategy to begin with. It had everything to do with a psychological decision of you had the fear of missing out, FOMO, essentially, right? You didn't want to be wrong, or you didn't want to miss out on the trade that you knew was correct, that was already playing out in the way that you already had predetermined before. That's where many, many traders go wrong, is that they can never be patient enough to either let the trade go, accept the fact that you didn't get in at the right time, or that it didn't confirm. Or if it does confirm, just wait for price to pull back into a level, and then you can get in at a better price. I've spoken to so many people over the years who have done that exact same thing, but I've come to the conclusion is that a lot of the problems you traders face is it has nothing to do with the concepts, has nothing to do with the strategy. You guys are understanding the material. It just comes down to the little tiny psychological decisions you make that impact your trading.
It's consistent application and discipline, right? Yeah. You have to be consistent with it. And that's why we recommend, the two-pronged approach, right? Placing a 0.5% risk on a limit order, right? And then executing by market on another half risk position, so that you can remove some of these psychological, issues that can arise, when, let's say, you have an area of interest that you really like. And I talked about this the other day on the live session, so forgive me if you've, heard this before, but this is, if this is something new to you, this is the kind of system that we like to recommend, at least for those who are kind of early on in the process, is, that constant issue of, do I place limit orders? Do I wait and execute fully by market? And, you do run into issues like that, like with FOMO, right? If you have a level of interest that you're really interested in, and you tell yourself, okay, well, I'm going to wait for the reaction to place any position in the market. Well, then you get the reaction, right? And price just dies from the point of interest, and there's no opportunity to get in, right? Then you either chase it, or it really hurts you because you had that level to begin with that you knew was the proper level to play off of, but you decided that this time I was going to go by market. And then next time you place a full position as a limit order because you missed it last time, and it blows right through your level, right? And so you're constantly going back and forth, and we really try to recommend having the continuity and a consistency with everything that we do in trading as we apply the concepts, not just technically, but psychologically, right? So we have to apply the logic of smart money concepts consistently, right? But at the same time, we have to have an unwavering consistency in our psychology and our mindset and our approach and the rules that we place for ourselves, right? That dictate our trading decisions, not our emotions, right? And so often, we allow our emotions to dictate so many of our trading decisions, and it really, really can hurt you, right? So I can't recommend enough having rules in place for yourself and thinking about it actively every single time before you're in a trade, so that you don't get caught with that kind of in the moment emotion, right? Where it's just, you have that sudden rush of emotion. Maybe you were up, good solid profit, and all of a sudden, prices reverse and you're 0.8% in drawdown, and you open up your phone, you have that sudden rush of emotion, especially when your personal money is involved. We have to be able to completely remove that from the equation, right? From the get-go, from the outset, and understand that this is a business, not a hobby, right? Trading is a business, not a hobby, right? And we should have rules and be disciplined, hold ourselves accountable as our own boss, right? To make the proper decisions on a consistent basis. And it can really help you, especially with what Nate was talking about with FOMO. So
Yeah.
I'll yield it back to you.
Yeah. So like, like I said before, trading is supposed to be boring. And I don't mean boring in the sense of like not being fun. Boring in the sense that it's repetitive, it's consistent. It's supposed to be the same thing over and over again. So when we start changing things up and it just can be on a day-to-day basis, you're already setting yourself up for failure. Like Aiden said, you may do one thing one day. If it doesn't work out for you that one time, you try to change it up and do something else. It's not consistent. You're not following a strict set of rules. That is why every time I get on a call with anybody, and if I've gotten on a call with you and I haven't provided this, then reach out to me afterwards. I always provide my trading plan for you because I don't care if you join my group or not. It doesn't matter. At the end of the day, that is the number one thing that you need to start with is a trading plan, some sort of rule-based system that guides your everyday trading decisions. But at the same time, we need to be able to have consistency in everything that we do. Because if we don't, then it's just going to lead to, blown accounts and it just spirals from there. All right. So another thing that you guys have been saying, my biggest thing right now is bringing my everyday life into my trading stress and desperations. My focus has been taking care of things outside to help my trading. Personal life is huge. If you talk to any professional trader, they will probably tell you that they have a pretty simple life in the sense that they're not constantly jumping on planes, going to these exotic locations. I mean, yeah, they have the money to do so, but at the same time, that's not what their lives revolve around. It's not these crazy parties and insane things that they do. It's pretty simple. It's just like my life is probably just like yours. We wake up, we have a routine, we trade, some of you go to work, I do other things throughout the day, but it's pretty, very simple. It's very straightforward. We need to align our personal lives with our trading life because the second our personal lives start to, impact our trading, or when we have, bad relationships with friends or family, or we have very stressful personal lives or a lot of responsibility that we can't really keep up with, that's going to impact your trading. So it doesn't just come down to understanding psychology and technical analysis. It comes down to the outside influence as well. Social media, your family who's, you're living with, or, you may have relationships with, your friends, your everyday activities that you have on a day-to-day basis. All of that needs to be sort of in alignment with your trading. Now, I'm not saying to, take away what you currently have in your personal life to focus on trading. I'm saying just create a plan or a routine that includes both, right? Because, same
Really
thing
think about what's holding you back. Like, and we all have issues and things in personal lives that bridge over into what we're doing, right, for work. But think about, is there something that's seriously hindering your ability to, focus on what you need to focus on for trading? And it's a lot of work, right? It really is a lot of work. And, especially as you gain experience and exposure, learning your own mind and what's going on in your own mind, right? And how it's holding you back in trading is a significant task, right? It's not something to take lightly. It's something that we need to actively be thinking about on a regular basis. And, if you're just jumping from course to course, right, and group to group and strategy to strategy without any focus or thought on your mind or psychology, then, you're doing yourself an injustice there as well, right? Because the end of the day, what Nate and I always talk about is we don't care what strategy you trade, right? Just find something that makes sense to you, right? And then that should allow you, that continuity of strategy is what allows you to then focus on what's truly holding you back. And I promise you, it's not the strategies, right? It's not some, you're missing some crystal ball method, right? Or new strategy, something that will give you a technical advantage. It's not that. That's not what your issue is. I promise you, it's your own mind. And the sooner you learn that, and the sooner you start focusing on what's going on inside within and stop projecting onto others, right, the quicker you're going to cross the finish line and reach your breakthrough. It's just the simple reality of it.
Yep.
So
see, my problem is I don't trust my setup, meaning I will have a good setup. I will check PC all the time, end up closing it. Yeah, and this is where it just comes down to having your trading be as simplistic as possible. You know, having a trading plan, having a rule-based system, because you know many people will, you know, see a good setup and not place it because they're scared. They're fearful. It's one of those emotions that many traders face throughout trading is being fearful, scared of losing. And what happens is you will watch the trade play out. If it doesn't work in your favor, then you're most likely to not take that same position the next time. But let's say the next time it actually does work out in your favor, right? Then you're more apt to take that position again. But those decisions are just driven upon your experience and what you have saw. You're going based off of your own mind and your own emotions, and not taking things from a more systematic or streamlined process. Like for instance, over this past month, I have lost a few trades, right? But when I come across another setup that has the same exact criteria and the same exact influences, I don't think twice about placing it, because I'm not scared that, oh, I lost on the same setup before, I'm going to lose again. No, I need to keep attacking the markets the same way that I know works week in and week out, month in and month out. Yes, I will lose trades. That is just one of those things. But eventually I'm going to win. Most of the time I do win. And the losses don't mean anything because my risk to rewards are good and my win percentage is fairly good. Right.
But I'd like to know why you are trading early though. What's driving that? What's the impetus behind that? Right. And if it's something where, you know, and I kind of talk about this in the psychology course in my video on trade exits, is, you know, I remember personally, I would back in the day make decisions on particular trades, on closing them out based upon the results of prior trades, right? It's, oh, I just lost a couple of trades. I'm in this trade now that, you know, is only halfway to my target. It's playing out nicely, but because I lost a couple of the trades prior, I just, you know, I'm fearful that I'm going to lose another one. And I don't want to be overly greedy. So I'm just going to randomly close the trade so that I can kind of account for those losses. And you end up closing the trade out and it ends up playing out and hitting your overall target. And you're missing out on all that additional profit because of what happened on prior trades. So, right, we have to have a very short memory in trading. And I talked about this in the live session the other day, is you can't have the emotions behind old trades, right? They're done and dusted. They happened already. Yep. You have to move on, have that short-term memory and treat each trade as a business transaction, right? And you can't get so emotionally tied to these trades. It's literally just a transaction for your business, you know, right? Following your rules, right? Following the discipline that you set out for yourself. You place the trade, you follow the rules, you either win, you lose, you break even, you move on to the next one. There's always another trade down the road.
Right. And most of the time it comes down to over leveraging, right? Because you're more attached to that particular trade. So, you know, pretty much any decision that you make in trading, whether that be entering too early, taking profits. I mean, let's think about it. From a psychological standpoint, if you're over leveraging on a position, you know you're supposed to be risking no more than 1%, but let's just say, for instance, you're risking 2, 3, 4, 5% in the trade. You're more psychologically attached to that trade. So when you see, let's just say, you know, that starts to go in profit, right? Maybe you have a prop firm challenge in which you can place 5, 10 lots, right? So you see in profit, you're up $1,000 US or euros or whatever, you know, currency you guys have in your account. So you see that $1,000 profit, you're like, great. Now it starts to retrace just a little bit, but now that $1,000 is down to 500, and you're like, holy moly, I just lost $500 within a matter of a couple of pips. You're focusing on it in terms of a monetary amount and not a percentage amount. How many pips did the price actually retrace against you that caused it to go from $1,000, let's just say, to $500, right? In all reality, it's probably not that much. We need to let the trade breathe. Why would we be pulling out of the market and taking profit at 500 when we should just be letting the trade go and letting it continue to be involved in the market, right? It's because your psychology says, I just went from 1,000 to 500. I don't want to lose any more. I don't want to end up losing this trade, having been up this amount of money. So I need to close the position. So from a technical, professional mindset, this is what, if that's the case, this is what that's telling me. This is telling me that when you pull out that position at that current price, from a professional standpoint, you think that pulling your profit out, you think that price is going to continue. There's some sort of technical confirmation that says, okay, when price has retraced this much, because I'm taking out my position, it's going to continue to go short. There's some sort of confirmation and confluence that tells me that, okay, price is now reversing back in the opposite direction. In all reality, it has nothing to do with that. You are just making the decision based upon your own emotions. It has nothing to do with what the market's telling you. It has everything to do with what your brain is telling you. So you pull out your position early because you're looking at it from a monetary standpoint of 1,000 going to 500, but there's no technical reason why you're pulling your money out, right? There's no confluence in the market, no confluence in the charts from what the charts are showing you. So you end up pulling your profit out way too early. Fine, price may continue to go in the opposite direction, and maybe you got lucky. But to make it streamlined, why did you get into that position in the first place? You have to trust your analysis. So if it, of course, price is not going to move in a straight line. You're going to see huge profit, and then that profit's probably going to start to come down a little bit because you have pullbacks. You have to let it go, maybe move stop to break even, whatever your strategy tells you, and then just follow that.
You can't let the blue screen cloud your judgment.
Yeah.
Right. Just because there's blue on your screen doesn't mean you should get all excited, right? And have those irrational emotions and close your trade early, right?
That's why I don't even look at my MT4 or MT5 account. I don't even look at it while I'm trading. The only way I look at it is if I'm placing a new trade or taking partials. That's it. And in all reality, I don't even need to look at it when taking partials because I already have different partials, automatically being taken for me.
Right. And as long as you set reasonable targets, right? Not trying to go for home runs, right? But singles and doubles, right? Using the baseball analogy, they win the game. Yeah. Right. So, you set reasonable, rational targets that you don't have to worry about, that's just personally. I mean, if your personality is to swing, that's great. You can apply the concepts from a swing perspective. But, I like to personally get in and out of trades very quickly. And so I set very reasonable targets, right? What areas could price potentially reverse on me. And that's where I take partial profits, right? Because the dripping tap does fill the bucket. Right. And that's a very powerful concept. And you you think, oh, well, I'm closing out my volume. I'm going to have less volume going to my overall target. You're going to find out that you want to do that on a consistent basis. You want to close out volume because more often than not, right, price likely will not reach that overall target. Right. So secure profits along the way and hold small runners to the overall target.
Yeah. And that's good because, I'm glad you said that. When you're looking to take partials, so many people take partials manually. That's really the stupidest thing you can do. Why do it manually when you can automate it, right? If you look at the chart and you're looking to buy, right? Let's say we're looking to buy Euro USD, okay? Now, you need to be pinpointing areas that price could potentially go short from you. Are there supply levels above current price that price could come into and have the possibility of shorting off from that level? Right? If it's just more of a, linear movement, more of an imbalance or just higher time frame, just linear movement where there's no region where price could, come into and reverse, then obviously you need to zoom out and see, okay, well, where, if I buy price right now, obviously my confluences are all there and price starts going in my direction, let me turn around and look for sell opportunities. Obviously you're not going to sell price, but you just want to look for sell opportunities. So if you're looking at it from that standpoint, you can say, okay, well, I think price could sell off from this region. That's where you need to be taking partials. Because even though there's, based upon the trade that you have, even though there's not a high probable chance that it will reverse, just because if you're trading, you're probably trading with the trend anyways. But just in case, that's where you need to be taking partials. So let's just say, and every trade is going to be different. Sometimes you have one partial region, sometimes you have two, sometimes you have three. Let's just say, for instance, you have two partial regions. You see that price could reverse from this level and this level. and then you have your overall take profit, right? So that's 3 positions you need to be placing. If you're risking 1%, you need to split up your position, having the same entry and same stop loss, but having 3 different take profits at the different partials level. 1/3% risk at one, 1/3% risk at the other, and the 1/3% risk at the last one, right? So that says, you don't have to manage the trade on your own because it's, you're already doing it for yourself. It's pretty much automating it. If it doesn't hit your partial region and it starts to reverse from you, you either have to make the decision to, move south to break even or just let it breathe. And most of the time it should be let it breathe because you've entered into that position for a reason. There should be no reason why we're letting those emotions get to us. If you have a buy or sell entry, you need to let it do its thing. So many people, what they'll do is they'll try to take partials manually. I think it just comes down to laziness. I think it just comes down to not breaking up their lot size and breaking up their positions and having to place 2 or 3 or 4 different positions for one particular trade. They just want to place it all and then manage it how they wish. But what happens if you have, a dinner to go to, or you're on the phone with somebody, or you go to sleep, or you're at your job and you can't look at the market to manually take out your partials? Then, price comes all the way back down, could have hit your first and second take partials level, right? Profit. And now you're seeing, okay, a reversal is coming in, or well, maybe not a reversal, but prices retracing significantly from those levels. So you then take partials right there. Well, that's another thing that you did wrong because you're just, through your own emotions, taking partials off of a random level, right? Like I said before, it's like, why are you taking partials? If you're taking partials, then you think that price is going to reverse from that level because there's a technical reason behind that. The charts are telling you, oh, if you're buying, then sell because you took partials. If the charts are not telling you to sell, don't take partials at that level. Let it go because it could easily come right back up. But that's, what you can eliminate losing money from or not making as much money from in the market just by simply having multiple different positions with different take profits. So if you're sleeping and you wake up, you could see that price came into your partials region and maybe reversed from it. But hey, at least you made some money. Right.
Yep.
So,
can't let the fear of losing or fear of breaking even cloud your judgment either. The same way you can't let the blue screen cloud your judgment. When everything is rules based, it's right. It's objective. This is not subjective. This is not arbitrary. Right. So you have to, but at the end of the day, only you know your personality, only you know your own mindset. So you know how your own mind works. You have to build out a rules-based system for yourself. We can give you kind of the blueprint, right? What we use, but it's not a cookie cutter approach, guys. And there's too much of that in the industry. It has to be customizable for who you are individually and how you handle your emotions. And only you know your emotions, right? Not me, not Nate, no one else, right? So you have to hold yourself accountable and build rules for yourself. It's as simple as that.
But most of the time it does come down to over leveraging. That just leads into so many other problems. When you over leverage, like I said before, you're naturally more attracted to that position. You're more hung up on that position. So what that will do is if you're placing an over leveraged position, let's just say 2 or 3% for one trade, what that will do is if you lose that trade, you're most likely going to be revenge traded, right? You want to make that money back. You just lost a significant amount of capital on your account. So you need to do everything you can to make that money back, right? So you revenge trade to try to get out of it. You also overtrade. That's another thing you do, is you want to make that money back in the form of placing more and more trades, trying to get back to that break-even point or get back into profit. Maybe you've had a good couple of months where you've done 10% return over those 2 or 3, 4 months, and now the month that you're currently trading, you're only up 2%. So you overtrade, having to think that you have to hit that 10% mark, because if you don't, you think that, oh, I'm doing something wrong, or I'm failing, or I'm not, living up to my average or whatever. It doesn't matter, because at the end of the day, like Aiden said before, you have to treat each trade as its own. If over trading is what you're doing to try to make more money, more trades do not mean more profit. It just means more risk, especially when you don't confirm these trades, meaning have a lot of confluence for each trade and treating it as its own, treating it as a separate business transaction. It significantly just decreases the probability of you winning that trade. And at the end of the day, it all comes down to probabilities, no matter what. Right? What is the probability that this will happen? What about this decision? If I make this decision or do this or this or this or this, what will that do to my probability? Will it increase it? Will it decrease it? And you have to look at it from that objective standpoint.
Yeah, and even Justin Connor, your comment there, and see what I'm talking about. There's literally psychological issues with everything, and it's even difficult to think of everything off the top of our heads because there's just so many different circumstances. But like you said, Justin, I mean, you were up $280 in profit for the day, and psychologically, you wanted to, you were telling yourself, I'm just $20 away from 300, so let's try to hit that $300 mark. Right. And then you force a trade, right? Because you had that greed component, right? Fear and greed. It's constantly, the two balancing, the two emotions psychologically, the most prevalent are obviously fear and greed. And thank you for sharing that example. Yes, I've done that before, right? Where I'm up like, $900 and something, and I really want to hit that $1,000 for the day. And I then force a trade that doesn't fully meet my rules. That's out of maybe the trading session, the trading window that I trade, right? And compromise my rules. And the issue with that is professional traders, they don't compromise anything, right? There is no room, there is no wiggle room, right? There's no, oh, well, I'll do this next time, right? I'll make an exception for myself this time. You can't have that, right? That is
also
undisciplined.
Thinking about it from a monetary standpoint as well,
Mm-hmm.
right? You say $300. Well, what is 300 out of your account size? What's your account size currently? And don't answer that question. But that's what you have to think about is, well, you have your take profit, your stop loss, and your entry already placed, right? $300 of what amount? Like you're looking at it from a monetary standpoint and not a percentage standpoint. Maybe $280 is 5% of your overall account size. There you go. You hit a 1 to 5. That's huge. That's phenomenal return. We don't need to hit an extra $20 because we have to base it upon percentages, not pips, right? So just like Aiden was saying about professional traders versus amateur traders, they so focus on the money instead of really the education, or the money instead of the percentages, the money instead of what's really required of them to be successful in the long term. So, let me go over a couple more. Sorry, I know we've been talking a lot. You guys have any other experiences that you guys have been going through? Please, this is your time to talk about it. We'd be more than happy to talk about that experience, maybe share a couple of our experiences and give you solutions based upon what you're going through. And a lot of it comes down to a trading plan. A lot of these current questions or current experiences that you guys have been saying come down to just having a trading plan and having a rule-based system, which we do have. And if you don't have already, please hit us up afterwards. We can provide that for you. We have our own proprietary trading plan.
Right. Which disclaimer, you still need to customize for yourself, right? But it's a good guide.
Yeah, definitely. Do you have a trade management tool we recommend for closed partials? Nope. It's just we do it. We do it before the trade even is placed, right? If we have 3 different profit levels, we place 3 different positions split up into a third of our percent risk each time. There's no tool that does it for you, really. And in all reality,
I'm sure there is out there.
It just takes a little bit more, of your time to do. But I always say if you're not willing, and I'm just saying when I say you, I don't mean you specifically. I just mean in general. But when you are, or when someone isn't willing to take an extra 2 minutes and place another 2 positions, split up a risk, just really shows the procrastination and laziness. Because when you look to take profit manually and not objectively, in an automated way, that in and of itself reduces your probability of making the most money you can out of that trade. Right? Because here's the thing, trading, if you do all the little things right, if you can follow your trading plan and everything that we pretty much said, even those little tiny details, you don't even have to win all of your positions. You don't have to win 50% of them. As long as you have good risk to reward, you maintain good psychology, you can manage emotions during your trades, you can do something as tiny as setting multiple take profit regions instead of taking profit manually. you're increasing steadily your probability of making money or making the most amount of money for each and every trade, which naturally leads to more profit, but also leads to you're not having to win the majority of your trades. Even if you lose more, since you're doing all the other little tiny things right, you can have that flexibility in saying, like, if I'm doing all the tiny things correct, if I'm using proper risk management and everything, so what if I lose an extra couple of trades because I've done everything else correct? It sort of almost evens out and you can still be hitting profitability. It's just when people can't do the tiny things correct is when they really struggle. But again, everything just comes with experience. I mean, that's really the true teacher in everything is experience. So, we can teach you pretty much everything that we know, but it just does come down to practicing, and it does take time. Like for instance, my mentor, I believe he was probably the best mentor anyone could ever ask for or have. And he pretty much taught me everything he knew, but I still had to practice it, and I still failed with it initially. That's just how everything in life works. You're not instantly profitable just because you have a great mentor. They can guide you along the right path, but ultimately it comes down to you to practice it, learn from it, work on it, and eventually get it, right? Nothing in life is you have instant gratification. Nothing, really nothing, right? So everything good really takes time and practice and experience.
Exactly. LeBron James did not become a professional basketball player overnight. Right? He did not reach the top 1% of basketball players in the world just by happenstance, by someone teaching him how to play basketball. No, he had to apply that. Right? He had to practice it consistently to become a real professional. And the same bridges over to trading, the same concept. Right? Right. This is the top 1% of the 1%. You know how difficult it is to get up into the NBA. You know how difficult it is to get up into the 1% of trading. It's difficult, but it's doable.
It's only doable if you do the little things right. And if you know that you're not doing the little things right, and you think that something's going to change if you just keep trying, nothing is ever going to change. You cannot expect change unless you make a change. You keep doing the same things over and over and over again, wanting different results. It's just not going to happen. So another question or something, Richard Dennis from the Turtle said that if he published his trading plan in the newspaper, most of the people wouldn't follow. Is this what psychology is? Exactly. And I don't know who this guy Richard Dennis is, but he's absolutely correct. Most people wouldn't follow because they wouldn't think anything of it. They don't think trading plans are important. They think that, if I just master the concept, master the strategy, or if I take signals or whatever, I'm going to be profitable. They don't look at the tiny little details. Most of them won't follow because of laziness. They don't stick to something because they want to see instant results. So when they fail initially, even with his trading plan, they just think, his trading plan's terrible. No, the concepts that he teaches terrible. It doesn't work. And they keep moving on to different things, thinking that there's going to be some sort of holy grail that when they come across it, they're just going to see instant success. And that's just not how it works. So Richard, he knows exactly what he's talking about. I don't even know him, but that's exactly correct. I've been trading on a demo for more than 3 months. Is that healthy? Absolutely. For sure. I mean,
healthy.
Yeah. I mean, even if you wanted to open up a very small, live account, and I do recommend even starting off live when you're first starting, because you get used to that psychology of trading with real money. I wouldn't recommend you to taking thousands of dollars and putting it into a trading account, maybe 100 or two, just something you're willing to lose. And you can practice the good habits. And you're probably going to lose, but it's better to lose on a small account, gain that experience, practice those psychological habits, than try it on a huge account and lose a large amount of money.
You got to have some skin in the game, right? And experience the full emotions of actually trading, your own money.
Yep.
Because it's certainly, I know I hear it from a lot of you. I experience it myself. Trading a demo, there's less accountability there, right? You just it's a little more willy-nilly, right? When you're trading live funds, be it a large account or a small account, it's still your money, right? Even if it's $100, $500, you don't want to lose that, right? You can go buy a nice steak or a couple drinks with that, right? So you still don't want to lose that money. So, there's that component in it, and you have to start somewhere, right? At the end of the day, if you can't trade profitably and consistently a $500 account, what makes you think you can do it on $100,000? So what's the rush of throwing 100 grand into an account, right? If you can't do it on a meager account, then you cannot do it on a large account. The same concepts apply. It's just, it's percentage-based game. It's just different volume.
Yeah, and that's another thing, guys. I see so many people posting these ridiculous profits, trading $100 account, trying to flip it into like 10,000. And I feel sad for those people, just because I know they're never going to be profitable ever, because that's just not the way of investing. I mean, think about it. Going from even $100 to $1,000, that's a 1,000% return. Do you think a normal hedge fund would risk doing that? They're trading $100 billion. Ray Dalio is up to like what, 140 billion under management. Do you think he's going to be trying to flip that to 1,000%? Absolutely not. So what makes anyone think that that's something that's sustainable? It's like, we have to observe the habits of these rich entrepreneurs, these rich investors, these rich traders, because they're the ones doing it, and then practice that. So, even with $100 account, if I would rather work with someone who can maintain, maybe $5 per month on a $100 account than someone who can maintain $300 on a $1,000 account. Why? Because the $1,000 account did 300, that's 3%. Or excuse me, I meant $30. That's 3%. But the other guy who did $5 on a $100 account, it's 5%. He's looking at it from a percentage standpoint, not a monetary value. So if you can do $5 on a $100 account consistently, you can do $50,000 on $1 million account consistently. Still 5%. It's just a different monetary. That's why people over leverage on small accounts, because they don't like seeing 5% growth. They don't want to see $5. They want to see $500 or $50 or $100, and they don't understand the percent that goes into it. So you go based upon percentage and not pips, or not the monetary amount. You're going to be setting yourself up for more success, because the people that go based upon the monetary amounts often over leverage. So when they over leverage on a larger account, they lose one or two trades, boom, they're done. So all it comes down to is psychology. Put a wrong lot size and didn't monitor the trade, and then see a huge mistake. Yeah, it's just something that you go through on occasion. Putting up the wrong lot size in, just attention to detail is so important. It's just doing the little things right.
Are you guys starting to see how important psychology is? Like, I hope we're trying to reinforce this on a consistent basis. Like, it's really been a theme for us recently. But are you seeing how it is an integral component of every single thing that we do when we're trading? Everything.
Yeah.
Right.
Exactly. Yep.
So
and that's
hopefully,
why we
you
wanted
can
to give that course away, for free for all of you VIP members, because that's going to be so important. And we don't want to, for the current members who are already a part of our program, who've already invested in your education, we already know that you guys are serious about this. So we don't want to charge for that, right? We want to be able to give that for free, and that's what we're going to do. Because I think psychology is huge. So you should be seeing that course in your dashboard maybe today, most likely either tomorrow or Monday. Anyways, let's keep going here. I had an order placed which didn't active for missing 1 pip, so I entered manually chasing the price. Also left the original other in place to maybe activate and then delete the bad entry. Pending order activated. Didn't have a chance to exit either. Double stop loss, -2%. Yeah, it's just one of those things. Again, psychology is like FOMO, and you can account for spread too. But if it misses by a pip, even if you account for spread, you just got to let it go. It didn't hit your overall level, because when you get in, even if it's 1 or 2 pips or 3 pips, for FOMO, right? You're seeing it go in the opposite direction. Then you finally get in. That's going to significantly affect your risk to reward. And when it affects your risk to reward, obviously it's going to be decreasing your risk to reward. When you decrease your risk to reward, it requires you to win more trades to be profitable. Larger risk to reward, you can lose more trades than you win most likely and still be profitable. So it's just one of those things. It just comes down to having a trading plan. Just saying, okay, hey, look, if this happens to me, I'm going to do this every single time and stick to it. Let's see. I've been trading on a demo account for more than 3 months. It's a help for me to work on my psychology and technology demo for so long. No, 3 months is fine. 3 months is really nothing in the grand scheme of things. I mean, I've been trading for 5 years. I wasn't profitable for my first 18 months. And, we can't expect to think that, oh, I've been doing this for a month or 2 months or 3 months, I should just be profitable. That's another thing that people go wrong with, is that they think that, oh, I've been doing this day in and day out for month after month after month and still not profitable. Well, it's really not even a long time ago. I mean, I had the best mentor I think anyone could ever have. I still failed for 18 months because it comes down to experience. So I would say, 3 months, that's really not even a lot. Maybe demo for another 3, have a whole half a year under your belt, and then, go live for a very small account for another 6 months, see what you can do. And if you see consistency, start to maybe increase your account size. I have a question. Can I ask on mic? Yeah, absolutely, guys. You guys can share your mic whenever. Just, you can interrupt me. I don't care. Whatever you guys need.
Yeah, Raja, what's up?
Hi everyone.
Hey.
It's morning, afternoon in different places of the world. Here is already evening, 7 p.m. in Dubai. Guys, I'm sorry, Nathan. I didn't want to disturb you because you were answering the question at the same time you were asking the question as well. That's why I just typed there. I know you have given the permission. Anyone can just grab the mic and start talking. That's why I asked there. By the way, my question is in 3 different parts, and these 3 topics will somehow are related to the psychology as well. So I will just ask you, is because I'm just a new joiner to you guys, and so far I'm really enjoying it. Okay. The content which I found in your videos, in your lessons, is quite unique and to the point, what I can best way to put it. And especially the term when you use in your videos, you said that they are engineering these charts to trap the small traders like us and whoever is new or a beginner. So this term, nobody ever taught us. We've always been thinking, no, it's just happening. It's happening. We didn't know the reason. So now after learning from you guys, your course, I found one thing, that everything they do it intentionally. There is a reason behind it. So this is actually is not a question. I just wanted to give a small feedback. Now the question is, as you see, I can see a lot of trades in many charts. You have a lot of trades from behind, like some trades are open like 8 to 9 trades already, meaning to say that if your new trade is going in a loss, your old trade is already helping the new trade. You are still positive.
Yeah, so exactly.
So what about the new guys who will join? What do? Do they still follow and keep the trade as a long, or they just take a small profit and go out? Because no, they don't have, like for me, I don't have some old trades still open in those charts which you are giving analysis step by step, next and next. So sometimes when we open the trade, it will go to positive a little bit, and then your trade is still open because your old trades are still helping, but my trade is already start saying negative. So what shall I do?
That's just a temporary thing, right? Because you are new, and you know, obviously whatever trade it is you're talking about is probably like AUD CAD or something, but that you obviously weren't part of the group when Nate and I were sending out trade after trade after trade after trade for massive returns on AUD CAD, and then eventually price does break structure and it starts, you take a couple losses. So there's nothing really you can do about that, right? We take setups as they are, right, and as they present themselves to it, and if they meet our rules. I don't know if you want to add anything to that, Nate.
Yeah, I mean,
that's just...
we could be in a million trades and you guys join. It's just the timing. It's unfortunate if you got in at the wrong time. And that's another thing. Before I finish what I'm about to say is, years and years ago when we stopped doing signals 6 months ago, something like that. Anyways, we were doing signals at one point. And what happened is many people would get in after seeing a phenomenal week. Then maybe we start the new week having won like 10 trades in a row or something like that. I'm just making it up. And then we lose our first trade on Monday. And they're like, what's going on, guys? I just joined. I lost 1 trade. That just poses a whole other psychological problem. Yeah, because, just because we lost 1 trade, doesn't mean we have to continue to expect 10 winning trades in a row. It's just unfortunate that person got in at the wrong time, or an unfortunate time, not the wrong time, just an unfortunate time. but we have to be going back to what you said is, we have to be trading each trade independently from one another. So we could be in trades, 5, 10, 20, 100 billion trades. I don't care how many trades we're in before you join, those are the trades that we're managing now. If you're not already in those, then you have to scratch them. There's always going to be new trades.
Right. There'll be
You
new
have to focus on
opportunities
what's
to
gonna
catch a
sell.
bunch of trades like we caught before you joined. Exactly.
Yeah.
Correct.
So-
correct. No, but let me just interrupt you for a while here. The second part of this question is, as you guys with the huge experience, what do you guys suggest right now, as per if you see the market overall view, like so much happening in the world, and we are reaching towards the end of the year, and obviously they will switch many directions of the market, and they will play around. Like last week we had a trade on, if I'm not mistaken, AUD USD, when Nathan, he said that we hit the stop loss, and he said they are trying to change the structure as per the bigger time frame. If I'm not mistaken, it was AUD USD. So this is what I'm trying to just put some light on, that what do you guys think right now market is leading us? Is it safe to keep the trades long, or we should just grab whatever we can and go out? Because it will, at the end, it will affect our mindset. Because if somebody new is coming in and he keep getting losses, and then sometimes he's profit, but mostly he go towards the loss. So obviously it will impact on the mindset. So I'm just asking.
The one thing that you said that kind of stuck out to me is grab whatever you can and get out. That's a whole other psychological problem. Remember, there's no point of grabbing something and getting out, because what was the point of getting into that trade initially? So yeah, just because, we did lose 80 USD last week, or maybe 2 weeks ago, whenever it was, because of the lower time frames. The whole like July, August, September, we were in lower time frames, and we were continuing with the higher time frame trend. So higher and lower time frames were in conjunction with one another. We were making so much money there. Then eventually we see higher time frame retracements, and that just comes with lower time frame breaks. So yes, we lose. That doesn't mean that, towards the end of the year, what's going on in the world, I don't really care what's going on in the world. Everything is going to be based upon the technicals that are on the chart anyways. So, I don't care about what could happen, or, what the fundamentals could be, or what the end of the month, the year could produce. It doesn't matter. I go based upon what I see, not what I think I want to see, or what I think could happen. That doesn't matter. So, when I'm basing my trades, sometimes I hedge my positions if I'm like higher time frame bearish, lower time frame bullish, like we are on these US dollar pairs, which can be quite confusing at times. Sometimes, if I can still be selling the market at higher time frame supply zones, but also continuing to buy the market at lower time frame demand zones. Just in case we do continue long and have a deeper pullback, I can still be making money on my buys. Obviously, I would lose on my sells, but the winners would outbeat the losers, and I would net aggregate position, net profit.
Yeah.
But if it continues in the higher time frame direction, then I can make money with the sells. Yes, I would lose on the buys, but we'll just continue to do that. Obviously, the risk to reward factor is going to play in, because the higher the risk to reward we have, which usually we do have at least a minimum of a 1 to 3, would outbeat all the losers with the net profit. You'll lose on some trades, but you'll net profit following that. And you have to just be willing to lose sometimes and win overall. It's
Exactly.
a long-term game.
Yeah, that's exactly what I was going to say. Is what we try to really emphasize is you got to step back and think about it from a long-term perspective, right? I mean, we were doing double-digit returns on a consistent basis, as a lot of these markets have been in really clean trends, like enduring trends, right? So catching double-digit returns when the lower time frames and the higher time frames were in alignment, right? Taking advantage of that, understanding, right? We teach continuing to trade with that trend and momentum until it breaks. So ultimately, you are going to start losing trades, right? We are going to see that reversal, right? We are going to see some higher time frame retracements. But in the aggregate, if you just step back and think about all the positions that we've taken, right, over this quarter, then these little losses here and there now literally mean nothing. Right. You can't get emotional. You can't care about the loss, because even if you start off now with some losses, you have to think about in the long term. We're going to start, you're going to start catching those same types of trend plays, right? Where you can get continuation trade after continuation trade like we've been getting, right? And then that'll completely wash out any losses that you might have seen as we've shifted trend. So it's really stepping back, first and foremost, figuring out the system that works for you. I know you're new, right? So I'd really recommend, instead of jumping into, especially in the current conditions of the market where we are seeing now a little less clarity in terms of trend as we're shifting into kind of higher time frame retracements, right? To really kind of focus in on your mindset and your education first and foremost, right? And then start applying them, because it sounds like there is some emotion involved already, right? And we can't have that. You can't have emotion when it comes to winning or losing or anything that you do in trading, right? So, and that's why I think the psych course is really going to help you, Raja, is I can I can feel the emotion, right? And you just simply can't have that to be a successful trader. It's just the reality of it. And I know you're going to get there, right? And this is why we're doing this session, right? We want to emphasize the fact that this is a rules-based thing. We can't have emotion. Each trade is just a transaction. It means nothing. It means nothing to us. There's always another trade, always another transaction.
It just takes time. It really does take
Exactly.
time, guys. What we say can be immediately applied, but you're not going to see immediate success just because trading does take time to learn. But working on the same things over and over and over again. And I see this question, or not even a question, but it says Bruce Lee said this is not, I'm not afraid of train 10 different punches, but we trained one punch 10 times. Yeah, exactly. It's just rinse and repeat, doing the same things over and over and over again. But to kind of answer your question, Raja, is we need to focus on the current setups, what's currently being presented, and treat each additional trade as its own right now. So as we are looking at higher time frame reversals and maybe lower time frame trends, we can at this point we can potentially hedge as long as the sell positions higher time frame. If we're talking about USD pairs, we can be hedging those sells at higher time frame supply regions with lower time frame demand buys, right? And it could hedge our position. So just staying psychologically and emotionally sound, but just treating each trade as its own will help going forward. Hopefully that answers your question. If not, just type it up in the chat if I didn't answer something correctly, but I'm going to keep going here. In this modern age of gaming, people have intense impulse and dopamine rush, and they expect the same with trading, but in reality, life and trading run at a slow pace. Yeah. I mean, Darwin was correct. I mean, natural selection will take its course. Everyone who doesn't have the right mindset, everyone who wants instant gratification, they'll slowly be eliminated from this planet. To be quite honest with you, they'll be the ones in, not making money. They'll be the ones not becoming wealthy. People who have the right mindset will be the ones, getting up there into the 1%. But yeah, this day and age, and it's so sad, these kids, all they do, because they're so, just embalmed in, not necessarily gaming, but just these instant gratification things, these games, these, just instant dopamine rushes. What people love.
Social media.
Initial high, right? It's a lot of it's social media. And that's just,
it's an addiction, literally.
Yeah. And it's quite difficult. All right. Can I ask a question on the mic, Bonalo? Yeah, absolutely. Go ahead. Yeah, if you guys have questions, just unmute yourself by all means.
Yeah. Hi, can you hear me?
Yeah.
Yeah. So I just want to answer the Raja Uma question what he presented. So basically, he was saying that if the beginner trader just enter the trade, right, based on the setup that you guys provide. So what I suggest is that don't just to the beginners, right? Don't just enter like what the Nathan and Aidens are sharing the screen. Instead, wait for scale into the lower time frame and wait for the break of structure, right? And then look for the what is the overall objective. And after breaking the structure, your risk will be very less, I think, instead of directly entering into the trade, because that will create a huge stop loss. Wait for this like a lower time frame break of structure that will create a smaller stop loss for you guys. And after looking at look at the overall objective. Is the objective is met, as Nathan said, right? Objective is the most important thing. So if the and based on that, you can look into your risk reward, right? You guys have to look into your risk reward, and after that you can take trade, I think.
Yeah,
Because
definitely.
directly entering into the trade, that will create a lot of risk for you guys, and if it went south, then maybe your psychology and mindset will get destroyed, or it
Right.
will affect the like.
Yeah, I mean, everything is, kind of has that domino effect, and one thing always ties into another. So yeah, I appreciate that, Dwesh. Thank you.
Yo, can I say something?
Yeah, what's up, Ted?
Um, I don't know, but psychologically, I'm picking up something when I think Raja was talking before, and it's something that I was dealing with. It's so basic, and when you are in this sort of industry, and like how I stumbled across you guys was YouTube, right?
Mhm.
So you try and like put your time and energy into like watching things to do with forex markets, investing. And then, as you know, YouTube starts to, recommend you things, and then all of a sudden, your whole feed on what you watch and like what you surround yourself with is like all that sort of stuff. And I come across a few other people, and recently, after watching the psychology sort of stuff, I got to the point where I was like, okay, these sort of situations, it's just like if you're in this sort of industry or looking into this sort of stuff, it's the whole world's collapsing. We're all going to die. A virus that has a 99 point something percent, survival rate and whatnot. And you're like, shit, I need to make money. It's all going to run out. As you know, in Forex, it's like if you scale into, once you start to understand, no matter what time frame in anything, you just go into it, you see what it's doing and you follow along. But this guy, I don't know if you guys watch Valuetainment. It's like for entrepreneurs. I can send the link in the if people are interested in watching it. But there's one word in here. It's sort of, I just thought because it's a psychological series that we're doing today. And it's this word that sort of flipped it around. And it was, if you look on, especially with Forex, it's awesome because we can make money on the way up or the way down. And if you go on statistically and you look at the charts, you can see all the crashes, and it's just like, and it's pretty much all manipulated and rigged, and that's what you
100%.
guys,
Oh,
what
yeah.
you can see. But there's one word that or quote that stuck out for me, and it was like, the future looks bright. Because at the end of the day, it's just, there's nothing wrong. It's just history repeating itself. Unfortunately, there's a lot of media exposing a lot of this stuff at the moment. So it's just like, before there wasn't as much stuff out there to sort of screw around with your head. And the way I was thinking was like, I need to make the money. It's all going to end. It's all going to quickly. And it's just like, mate, it's all good. It is, the future is absolutely fine. And in Forex, like if you look at, what's his name? Warren Buffett, he made all his money, like he was worth 100 grand when he first started. After the first crash, he went to like 20 or 30 million. And then each crash after that, he doubled. And he doesn't do Forex. He has a different way of investing. And
Yeah, he's long-term investing.
yeah. And with Forex, you can make money on the way up, the way down. And the main point I was just trying to say is that if anyone's thinking of how I was thinking, that bit of FOMO, the future looks bright. So
The future always looks bright because there's
Appreciate
always
that, Ted.
ways of changing and adapting. And, so what about the past? Doesn't matter. You can go into the future and into the present, what you're doing now, make that change and become better as a result through experience. So, history repeating itself with crashes. I mean, yeah, definitely crashes are inevitable. And as long as we're just following a trading plan, as long as we're just following our system, doesn't matter what crashes come. And even if we think that, there's going to be a crash tomorrow, we shouldn't hesitate to continue to place trades if everything still meets our rules, right? And a lot of social media is really what's becoming a major problem with traders, is that information overload. Many people's perspectives are changing everyone's opinions and biases. And another thing is, when we're looking at a chart, what we can't have is, just because we may have a predetermined bias, we may think that, okay, well, we want price to go long from here. We're trying to look for every little piece of information to kind of prove that point, that sort of confirmation bias that we just really can't have, because we have to think about it from the other side. I always look at every trade as if, okay, if I'm looking at a buy opportunity, could there be a sell opportunity? Where is the sell? Is there a sell opportunity somewhere? How many confluences can I put together for a sell? And if there's just none, then it probably means that my buy opportunity that has its confluences will probably most likely play out. So I have to look at the other side of the coin as well.
It's all about the contrarian perspective, right? And that's really what we're doing in general, right? With smart money trading, is looking at things from a contrarian viewpoint, right? We're looking at what the masses are doing the way that they're trading, and we're essentially doing the opposite, right? So but that even applies on the individual basis, right? For yourself and the trades that you're taking. It's, you have to be your own devil's advocate. You have to look at something and ask yourself, well, what, could I make a case for it actually going the opposite direction that I'm expecting or that I'm projecting, right? Instead of getting married emotionally to one particular bias. Again, it's just all psychology.
Yep, exactly. All right, guys, so I'm going to go over 2 more examples. I'm going to share my screen here. After I go over these examples, we're going to go over the quiz again, see how well you guys did. We'll take some last minute questions, and then we'll do the giveaway, and then we'll let you guys enjoy your weekend. All right, so it's been about an hour and a half. We'll try to wrap it up here in the next 10, 15 minutes. All right, so I'm going to share my screen here. First one I'm going to go over is something I talk about within the FOMO psychology series on my YouTube channel. This is absolutely huge. Many people have FOMO these days, and this is a beautiful example. Now, I know this is the weekly time frame, but this can be applied to any time frame. 1 hour, 15 minute, 1 minute, 1 second, doesn't matter. It's fractal, everything can happen. So let's just say, we're trading on the 15-minute time frame. We're in London, New York session. We're looking at taking a trade. So we see the manipulation, the ascending liquidity, right? We see people are buying upon this trend line. We sweep that liquidity very sharply. Then we move in the overall direction and make a higher high as compared to our prior swing, but we have broken that structure, right? So now what do we look for? We look for entry. Okay, so we look down here in this demand zone, that level, that swept liquidity, sell to buy, and we can see that wick right there with that green candle. That's the imbalance fill. That would probably give us a really good area of interest to take a buy. It's also 1.0350 psychological level. So we come back down, we sweep sell side liquidity in here, and we just miss by a few pips, right? Price starts to push up, push up, push up. We have 1, 2, 3, 4, 5, 6, 7 green candles in a row. And if this is on, let's just say the 15 minute or the 1 hour, that's a significant amount of time when a trader is looking at this every single second, right? They're just constantly watching it. So what they think is, oh, it's come into the demand level. It just didn't quite hit my entry. Oh, I have FOMO now. I'm going to get in. The fear of missing out. The analysis was correct. You don't want to miss out on the opportunity. So you get in somewhere up here. Maybe it pulls back and then it makes another higher high. So you're like, oh, okay, it's counter trend bullish now. Oh, great. Now I can buy up in here. Okay, they buy there, and guess what happens? Comes back down. What else does it form? Shoulder, head, shoulder. Takes the sell side liquidity here, entices sellers below the neckline, while also taking the stops of any buyers that are up in here. Price comes all the way back down, reacts off of our original level to begin with, and then we go long and we make a higher high. So this is where FOMO really sets its course, and this is how manipulation can really affect traders in that way. The markets do this on purpose to affect you psychologically. Every single piece of movement here is based upon decisions, right? Decisions and manipulations to affect decisions. So when we don't get in here, what do? If price just goes long, we scrap it, we move on to the next setup. Or we wait for price to come back down and we're patient, right? Because we have a trading plan, right? In other ways to, combat FOMO, you have trading plans, you have a rule-based system, you have, a trading journal, trading checklists, all this type of stuff, right? Routines. You have your proper stop loss and multiple take profit levels. It comes back down into this region, and now we can buy it if we're patient. And now we're making money and not having to lose because we have FOMO here. If that's our original level, it's either we get in when it comes back down into that level, or we don't get in at all. There's no point of getting in at a worse price, because then where are you going to place your stop? You place your stop here, okay, that's really not an appropriate level, but you place your stop here, now that's a significant decrease in risk to reward. Requires you to win more trades because your R to R is small. So yeah, that's what I want to talk about there. And the last one I'll go over very quickly, pretty much the same exact thing is what I pretty much talked about with FOMO. They want to see more proof. People want to see proof. They're like, okay, one more higher high, then I'll get in and off the next pullback. Oh, let me do one more. I want to see a little more proof. So they get in off of the, and premium price. They look to buy it because they don't want to miss out on this huge move, but they were looking for too much proof. And then price starts to reverse. So they're like, okay, I'm going to increase my position. It's just a little bit of a pullback. It's going to go long. Then price doesn't. And I'm sure you guys have seen this at some point and experienced this live. You get in and you move your stop. You keep moving your stop thinking, oh, it's got to reverse. It's got to reverse. And then at some point psychologically, it hits you to say, okay, I'm just going to get out. I'm taking the loss and I'm moving away. Or maybe it just blows your account. And then price starts to pull back. You're like, it's going to go short either way. Then it continues. You say, I told you so. I knew it all along. Then it starts to go long again. And now you get very upset and you're thinking, why did I get out at that? Why did I buy at such a premium and get out at such a discount? And then guess what? You buy up here again because you don't want to miss out on the real move that you thought, this was the real move, but you realize that this was the real move. So now you get in here and the cycle repeats all over again. So what does this look like? Pullback, or maybe expansion, pullback, expansion. We'll have another pullback, expansion. The markets look exactly like this because it's a psychological game. No, if you read all of this, if you watch this video and I describe each and every point here and what people are thinking during each and every point, then go look at the charts. Why do the charts look like they're pushing up, then pulling back, then pushing up, then pulling back, then pushing up? It's a market and it's based upon volume and liquidity, yes, but at the same time, it's all psychological. It's psychology putting it into a physical representation and live charts. That's pretty much what it is. So this is very important. Go watch my series videos, guys, if you haven't already done so. I talk about a lot of really good stuff. Just wanted to address some stuff today, go over some experiences. I hope this live session has helped you out a lot. If you have any additional questions, please feel free to let me know. I'm going to go over the quiz questions now. We're going to do it again. So I'm going to go through 1 through 10 very quickly. You can answer the questions again, and then I'll go over the answers. So you can see what you got right and how you can compare those original answers to the ones that you have now. And then I'll do the giveaway, and then we'll be all good for the weekend, guys. All right, so question number 1. Psychology is what % of your trading success? 80%. Technical analysis is what % of your trading success is 20%. So it's an 80-20. I talked about that 80-20 rule within the first video, I believe. What are 2 primary emotions that most traders encounter while trading? I'll let you answer that question because the first one was very easy. Everyone got that. Yeah, no problem, Austin. Thank you for tuning in.
There you go. You got
Fear
it.
and greed. Fear and greed. That's correct. The 2 primary emotions that most traders encounter while trading: fear and greed. Number 3, trading should be treated as a blank, not a hobby. You guys can just answer that in
Easy.
your mind. Yeah, as a business, should be treated as a business, as something full-time, as a career. Different words for that. Very good, guys. Number 4, our term, a dripping tap fills the bucket, is in reference to which component of trade management? Our term, a dripping tap fills the bucket. Think about what that means. It's not risk. A dripping tap fills the bucket. What happens when you have a bucket and you just start dripping water into it slowly, very slowly?
Peter's got
Eventually
it.
it fills up.
Peter's got it. Yeah. Nice.
Yeah, Peter's got it.
Partial,
It's
partial profits.
Yeah, partial profit taking. You can't go broke taking a profit, right? As long as you're taking partials at the right regions or at areas you think that could potentially reverse, slowly that dripping tap is going to fill that bucket. Those partials are going to add up to big returns. Number 5, mindset and approach can be a huge hindrance to trading success. Most traders begin by prioritizing the what instead of the what. Most traders, especially when they're beginning, exactly, Reagan, you got it. Money instead of the skill, or money instead of the education. So that's correct. They prioritize making the most amount of money as much as they can, as possible, than really investing in their education first. Right, profit instead of risk. Yes, that's another good one as well, Hugo. That's correct. Profit instead of consistency. Yep, that's another one. Just different words for it. You guys got it. Number 6, one of the biggest contributors to psychological growth is actually establishing the continuity of what? The continuity of what is something that resonates and makes logical sense to the trader. And allows the trader to actually focus on his or her own psychology. And that's right.
Hugo's got it.
Right. Strategy.
Continuity of strategy.
Your strategy.
You're applying the same concepts on a regular basis from a technical analysis standpoint, and you're not continuing to try to tweak things technically. because you found something that works and makes sense for you, and you're continuing to apply that from a technical standpoint, that allows you to step back and really fix your mind
Yes.
and focus on it.
So we were looking for strategy there, but rules, process, discipline, managing risk, experience. Yes, those are all, very good answers as well.
Mhm.
Okay. Number 7, what is the term for searching for only the information or evidence that proves your existing beliefs?
Mhm.
Confirmation bias. That's right, guys. That's correct. You're looking for confirmation bias. So many people have that. You want to see continuations long or continuations short. So you look for any little thing that contributes to that bias. And if you get that confirmation, even if it's just 1 or 2 things in your brain, it says, oh, okay, I'm going to win this trade. I'm placing this trade. But is it really the correct trade? You have to take it from what is the market telling me, not what I want to see. So if you guys know what our, if you call it a motto, Aiden, I don't know what it's called, but we say this all the time is we, trade what you see, not what you want to see. Kind of eliminates that confirmation bias. That's the first thing on our website. Trade what you see, not what you want to see. Number 8, what are the 2 primary byproducts of over leveraging besides the obvious, which is blowing your account? These byproducts are 2 different additional things traders do. Talk about this as well.
Besides getting in the fetal position and crying.
You got one of them, right? Over trading is one of them. And there's the other one, revenge trading. Over trading and revenge trading are the correct answers. And all of your other answers you guys have are still correct in a sense. But we were looking for over trading and revenge trading. When you over leverage, you're risking more. You're more attached to that trade. When you lose, you revenge trade. You don't want to see that huge loss come out of your account. You want to revenge trade that back to try to break even or make even more money. That leads to over trading as well. They think that more trades that they place mean more profit. You got to treat each trade as its own. Number 9, what makes you money, not what. So blank makes you money, not blank. Looking for 2, that's a 2-part question. Yes, exactly. Percentages make you money, not pips. Exactly. Someone can make more pips than me, but I can still make more money than them because I have more of a percentage return. So if someone has a 500 pip take profit and a 100 pip stop loss, and I have a 10 pip stop loss and a 70 pip take profit, they've made 430 more pips than I did, but yet I made 2% more than they did, which means more money than they did. So all comes down to percentages, has nothing to do with pips, because when you base it off of pips, your risk is not consistent. All right, number 10, last one. Name 2 ways to eliminate FOMO besides patience. There are 5 that I mentioned in the Psych series video. 2 ways to eliminate FOMO. You can write down as many, or you can have all 5 if you want. Yep. Trading journal, trading plan, discipline, respecting the plan. There's trading checklist, journaling, appropriate stops and multiple take profit levels, trading routine, back testing. Yes, all of those are correct. So how did you guys do between the first one and the first quiz that we did at the beginning and the one that we did now? Did you guys learn some things? Do you have more of the questions you got right?
All right, 7 out of 10, not bad, guys.
Good. See, all of this is very surface level stuff, and it's just giving you guys the basics and kind of unraveling some things. Our course is really going to divulge deeper into these concepts. Now, we're going to be talking about some of these concepts for sure, but giving more detailed explanation, giving you exercises and solutions that you guys could do or utilize so you can actively work on these problems, but also going over, other deeper components and concepts. So all you VIP members, you'll be getting that for free within the next day or so. But it is available for purchase. We are running a 20% off deal on it. We're going to keep it relatively inexpensive. We just think that this is very important to have. So hoping to get up for a lot of people. Can I ask a question before you wrap up? Yeah, definitely. Go ahead.
Good day, guys. Can I ask a question before you all wrap up?
Yes, go ahead.
Based on what you said, right, on trading, like even if you learn, you must have experience to be like consistent and all that, right?
Mhm. That's correct.
So let's take cable for example, right? GBPUSD, like the recession, right? Because I've only been like trading for a year. I'm still young,
Okay.
only been like trading for a year. So
Okay.
because like I've never seen like that recession before, and I have like 6 months experience and all that. So how can I actually like overcome like the losses that I've taken on that recession? Or is it just me trying to catch the lows and not following trend? Or because like I don't understand what's going on.
So that's a good question. If you're not understanding what's going on, then you probably shouldn't be trading it, right? So just because you may look at just GBP USD or maybe just that pair and another few pairs, it doesn't mean that there's always going to be a setup on that every time. And if you take losses, the goal is not to just get those losses back. That's not the overall goal. The goal is to learn from your mistakes. The goal is to do the correct things and the right things the next time. And eventually the money is going to take care of itself. If you do everything right, eventually you're going to get back up into profit. So our goal shouldn't be, okay, I lost 30% of my account, let's just say, now I need to make 30% back by this time or whatever. It shouldn't be focusing on that.
Yep, that puts too much pressure on yourself, right? And it's an emotional decision, right? To try to recoup losses. That shouldn't be the approach. The approach should be to get to the bottom of why you took the losses to begin with, so that you can avoid the same mistakes in the future.
Yep.
Right. It's taking these things out of the subconscious, putting them into the active consciousness, and really diving deep into what mistakes where you fell short, what was holding you back, right? What emotions were going through your head, all these different things you have to be able to reflect upon yourself so you can avoid them in the future. Right. And you are young, right? It's only been a year, and there is no rush to this, but you're not going to see all different market conditions within 1 year. Certainly. Nate and I still haven't seen, we've done back testing. We still haven't experienced live trading environments, the environments that we've seen years and years ago in the past. Right. But we've been able to develop an approach to adapting to changing market conditions psychologically. And the idea behind the course is really to share our experiences with you from what we've seen, right, in our combined nearly 13 years of experience, so that when certain situations arise that inevitably will, and that you haven't experienced yet, you can learn from us and kind of how we coped with some of these things and the way we dealt with them and reacted to them, so that when they do arise, you're kind of prepared. But at the end of the day, it still comes down to, you're the one executing, you're the one making the decisions for yourself. It's your money, right? And you do have to learn the hard way often, right? It's just simple as that. But we can certainly help you and guide you and share our experiences with you to kind of lessen the blow.
Yeah, just comes down to just treating each trade individually, not worrying about the losses, and just focusing on the right things and getting the right education and focusing on, that type of stuff and having that experience and mentorship to really guide you along the way. It's not going to be instantaneous. You're going to see profitability, but start to learn the right habits and the right things. And if you're confused about a pair or a direction, well, then go to another pair. Just focus on something else. You don't always have to find a setup every day on the same pair. If you don't find anything, there's probably no setup. So
it's all about building the habits out. It's all, and we really like to use the kind of gym example, right? Personally, I built the habit out years ago that going to the gym every day is something that I do. There's no question about it. It's part of my routine. It's part of my discipline. No matter how busy I am or how tired I am, or if I didn't get any hours of sleep the prior night, I don't care. It's just simply what I do. It's kind of the analogy over to trading is your plan, the rules that you put in place. It has to be no question about it. It's what you do. It's the way you trade. It's the approach that you have. It's unwavering. There's no room for exceptions.
Yeah.
Right. So discipline, and again, it ties into, like Nate talked about earlier, your personal life. If you're not disciplined in your personal life, it's not going to bridge over to trading. If you're not doing the things you should be doing in your personal life, then you're not going to be doing the things you should be doing trading. So it's you have to be a professional, right? All in all.
Definitely. All right, guys. I'm gonna go over the course giveaway really quick. I'm gonna do that, and then we'll go over some other questions. I'm gonna have a hard stop at 12 o'clock. So we got like 9 or 10 minutes.
I just
here.
want to share my experience, guys. Can you hear me?
Yes.
Oh, yeah.
I'm gonna do my my giveaway really quick, Duish, and then we can get into that. All right. Sorry, I'm just gonna
Yeah,
want to
sure,
make sure
sure.
we do this first, and then we can finish off with questions and stuff like that. All right, guys. So I'm gonna ask one question. It's gonna be the first person to get it right. So you guys have to be on the ball here. It's a fairly easy question. You know, I say this a lot in my one-on-ones. I say this a lot in my videos, and I even said it today. So the winner, if you guys are not a part of my group, you'll be receiving that site course for free. If the winner is already a part of my community, I'm going to be giving you, obviously, you know, that site course will automatically be for free for you guys, but also a $100 giveaway here. All right, here we go. Here's the question. First person to get it, first person I see that gets it wins. The question is, what is the true teacher in trading? What is the true teacher in trading? The ultimate teacher, experience. That's right. Bonalo, you got it correct. You got the first one. Bonalo, you are the winner here. Experience, that's exactly what it is. It doesn't come down to really anything else besides that. You need to find a mentor first and foremost that will help you through the process and the routine and what's correct, like all the objective type of stuff. Can help you through psychology and giving you the right path to follow, right? But at the end of the day, you have to just have experience. You have to. So I like to say this, you know, in terms of like university and a job. University, I mean, I have my opinions on what school really is, but university is just to kind of teach you the fundamentals, the basics, but the true teacher of how you're going to go from a university to a job is doing hands-on work. It's when you start that job and you do it hands-on, that's when you're going to gain that experience. And that's when you're going to start to be good at that profession. So that's why I really don't like to read trading books. I feel it's not necessary. Everything is in the charts. The experience is in the charts, and it just takes time. It's time and experience is really the biggest thing.
And exposure. Yep.
And mentorship too. So you got to be involved in the right mentorship program to really escalate that trading, but then utilizing those people and that education. And then it just comes down to time and experience before you're profitable. And it does just take time. So Bonalo, you got it correct. Hit me up after the session and I will provide you with your reward there. But yes, you guys all got it right. It's experience. All of you got it. But Bonalo, you got it first. So yeah, I'll take some last minute questions. Duish, yeah, you can go ahead and share that experience.
Yeah,
I have 7 minutes.
yeah, so
How much time?
I just want to share like quick fast. So in June, around June, right? You like, I just want to like conclude the point with that before you like take trades like beginners, right? Before you take trades, don't use your social media app or YouTube or anything like that, because that's just create hype in you like taking trades, right? If you scroll through Instagram, you may see that like Nathan just told me that supercars and like everything, that trading lifestyle thing that just hype you to take the trade while you like before you like enter into the markets. So what I suggest is that don't use your like complete distraction, cut out yourself from this social world, like social media world, and just sit around it, like be patient, right? So that will help you to like analyze your trade very well, and it will help you out. And the reason I'm supporting is this is here is because around June the market was quite bearish, right? If you like open up YouTube and anything on YouTube or Instagram, everyone was talking about recession, recession, recession. Hell lot of things were going about around June recession. But if you look from there, June, like market has been upside, especially the Indian markets I'm talking about. So like everything was like YouTube, everyone was talking about recession, shorting the market. But let's say if you have watched that video 1 hour before taking trades, right? So that recession, like like it will create an confluence, right? Within yourself before taking a short trade, even though the setup is bullish, but you will get into the trap, or maybe you will not get confidence in the like bull setup trade.
Yeah, it's just that confirmation bias that people have and the information overload that really kills. So many different perspectives out there. Social media really just influences everyone a lot. And it's just not something that you should be a part of, in my opinion. I'm hardly on social media at all. I don't let it affect my trading. I really put everything away when I trade. I don't look at, oh, this person looking at this. It doesn't matter because I know my system works. And to be quite frank, I don't need anyone else telling me, hey, buy Euro USD. If I'm going to be selling it, I'm going to be selling it. If I'm going to be buying it, I'm going to be buying it because I have to stick to my plan. And heck, sure, I may lose on that trade. I may be wrong, but it doesn't matter because it was my decision, what I see, not what I want to see, or not influenced by other people.
And you're going to get to the point where you feel so confident in your abilities and the experience you've had, where you're going to look at yourself and be like, why would I have ever trusted somebody else and their signals, or setups, which, I hope you guys can trust, our setups. Obviously that's the goal, is to reinforce, but that's why we don't send signals anymore. But you're going to get to the point where it's like, you feel fully self-sufficient, right? And you can do it all on your own and not need anyone else to kind of hold your hand. And that's really what the gap we're trying to bridge with you all. And promoting the fact that you can reach that point and that you literally don't care about what anyone else is doing or what they're trying to, their bias they're trying to project onto you. Like, you have your own interpretation, your own perception of the markets based upon your knowledge and based upon your experience.
Yep, definitely.
Yeah,
Thanks for sharing,
that's why I
Josh.
said it's for it's for beginners only, because once you get to know the markets, right, you will not get into this type of trap then, because you have a mature mindset towards the trading, right? But as a beginners, they don't have they all are just pumped up with the adrenaline rush.
Yeah.
So
And it all
maybe
just ties down to experience. People
yes,
we'll eventually
exactly.
learn all that stuff and come to realize that naturally just with time. But yeah, all right, guys, I have 3 more minutes left. If you have any more questions, Bonalo, I see you have one. Anyone who has last minute questions, please feel free. I have another 2-3 minutes, and then I have to have a hard stop at 12 o'clock.
Oh, can I ask a question?
Yes.
How can one what's the word I'm looking for? Oh, how can one diminish deception?
I'm thinking deception in terms of what other people are doing.
No, as in let's say you're in the moment and you are analyzing a chart, right?
Okay.
Let's say before your forecast on maybe Sunday towards the next week was I see NZD it's gonna sell, right? Then you plan your trade and all that. Then when Monday comes, the first movement of NZD USD, it starts disrespecting your forecast, right? So because of deception, that's where you change your bias from a buy to a sell. How can one eliminate deception, seeing things in the moment, then at the end of the week you see that, oh, your focus was a bit right, but then you just change your bias due to how the market moved or how the market opened on Monday?
Yes, that's a good question. So you have to stick with your bias, right? The reason why we do weekend analysis is to say, okay, this is what I think is going to happen. Obviously, we have to adapt what the market shows us, but to a certain degree, right? We can't just say any little tiny movement that the market does that's totally switching our bias, right? Now, if there is a clear shift in structure, a clear shift in momentum that has technical confluences with it, then yeah, we can look at that as a potential shift. But at the same time, we still need to be confident in what we're looking at, but not too confident in the sense that we're looking only to confirm what we want to see and not what the charts are showing us in terms of being able to adapt. But in that case, what we could do if you have good risk to rewards, you can hedge your positions. If you're looking for the week to be bullish for some reason, you have buy setups, you can buy price at wherever you're looking for. But if price starts to turn around and sell off and you have confirmation and confluence for that, you can then sell it again. Obviously, every single trade has to meet rules and confirmation, but
and that's why we really emphasize the weekend top-down analysis, right? And what Nate's obviously been doing live sessions on Saturdays, and I've been doing Smart Money Sundays on Sundays for almost 2 years now, is, you know, mapping out the overall levels, right? The market structure on a higher time frame, and especially where the overall objective is in this market, what the narrative is, so that then we have that basic foundation, underlying logic and narrative of the market, so that we can understand what throughout the week is truly noise and what is actually legitimate, based upon our higher time frame levels that we've marked off. So hopefully that really
All right,
helps you.
guys. Yeah, that definitely. Hopefully that helps you all. How can we get access to your trading plan? Hit me up on Telegram. It's at Ariel FX Trading, so ARIEL FX Trading, or find my Instagram. It's Ariel__FX. It's a double underscore. Hit me up for that, for information about our membership or mentorship, if that's what you're asking about. Just head over to my website, arielfxtrading.com, and just book a free call with me. We would love to speak with you guys. If you're not already a part of the group and wish to learn more, we just want to make sure this is the right fit for you.
Yep, we'll drop it in there. We'll drop the trading plan. That's fine.
Yeah, we can do that. All right, guys, I do have to head out. I'm late for another meeting I have, but it was great talking to you all. Thank you guys for your time. I'm going to post the recording as soon as it finishes processing, which could take a little while, but I'll get that up for you guys if you guys joined in late.
Yeah.
But thank you guys so much.
Thanks,
again,
everyone. Appreciate the
Thank you.
participation.
Yeah, thank you guys. If you have any other questions, feel free to hit me up. I can answer them on the side. And Vanilo, please hit me up later. I can provide you with that giveaway
Nathan,
winner. Yes.
I'm sorry, guys. I'm sorry. I'm gonna hold you for 1 minute only. Then you guys.
Okay,
can
that's fine. I'm gonna let Aiden answer any questions. I have to hop off right now. I'm late to a meeting, so.
Okay, so
Yeah.
Aiden,
Yeah, what's up?
thank you, Nathan. By the way, it's nice
Yeah,
talking
thank
to you.
you.
First of all, Ted and Devish, you have answered